It's Sunday, April the 26th, 2026. You're listening to the DX Today AI Daily Brief. Today, Google commits up to $40 billion to Anthropic in the largest AI investment of the year. China's DeepSeek launches its V4 flagship designed for Huawei chips. And Meta and Microsoft cut more than 20,000 workers as AI spending soars. Let's get into it.
Alphabet announced Friday that Google will invest up to $40 billion in Anthropic, deepening one of the most consequential partnerships in artificial intelligence. $10 billion arrives now in cash at a $350 billion valuation. The remaining $30 billion is contingent on Anthropic hitting performance targets. Google Cloud has agreed to deliver roughly 5 gigawatts of computing power to the cloud maker over a 5-year window. The investment lands just days after Amazon committed up to $25 billion more to Anthropic, putting two of the largest cloud providers on opposite sides of the same balance sheet. Anthropic's annual run rate revenue surpassed $30 billion this month, up from $9 billion at the end of 2025.
Now to China's open source push.
China's DeepSeek released a preview of its long-awaited V4 flagship model on Friday, calling it the most powerful open-source platform in a direct challenge to OpenAI and Anthropic. The release includes V4 Pro with 1.6 trillion total parameters and V4 Flash, a leaner variant. Both ship with a native 1 million token context window large enough to load entire code bases or long legal documents in a single prompt. DeepSeek introduced a technique it calls hybrid attention architecture to improve memory across long conversations. Just as significant, V4 was adapted to run on Huawei's Ascend 950 chips, marking DeepSeek's deepest move yet away from American silicon.
Anthropic deepens its Japan presence.
Anthropic and Japan's NEC Corporation announced a sweeping enterprise partnership this week. NEC, one of Japan's oldest technology giants, will deploy Claude across roughly 30,000 employees worldwide, becoming Anthropic's first Japan-based global partner. The two companies will jointly develop secure, industry-specific AI products tailored to Japan, starting with finance, manufacturing, and local government. NEC is also embedding Claude into its Security Operations Center services and standing up an internal center of excellence to build what it calls Japan's largest AI native engineering team. NEC's stock surged about 5% on the news, a rare swing for the storied Tokyo-listed conglomerate.
Now to AI infrastructure.
Amazon Web Services landed a major cloud win on Friday, announcing a multi-year deal with Meta Platforms to deploy tens of millions of Graviton 5 processor cores for Meta's growing AI workloads. AWS unveiled the Graviton 5 chip with 192 cores per processor and a cache 5 times larger than the previous generation, cutting communication delays by up to 33%. The chip is built specifically for agentic AI, real-time reasoning, and code generation in cloud data centers. AWS timed the announcement to land just as Google Cloud Next wrapped up, a not-so-subtle reminder that the rivalry for hyperscale AI capacity is now measured in chip cores and gigawatts.
Tesla starts robotaxi production.
Tesla CEO Elon Musk announced Friday that Tesla has officially begun production of its long-teased Cybercab robotaxi at the company's Austin facility. Musk shared video of multiple units rolling off a new assembly line built around what Tesla calls an unboxed manufacturing process, a modular approach the company likens to consumer electronics rather than traditional auto assembly. The launch comes as Tesla expands its supervised robotaxi service into Dallas and Houston this month and rolls out full self-driving version 14.3.2, a unified AI model now powering Smart Summon, full self-driving, and robotaxi. Tesla also raised its 2026 capital spending plan to $25 billion.
Now to the workforce story.
Meta confirmed this week that it will lay off about 8,000 employees, roughly 10% of its workforce, with cuts beginning May 20th. The company also canceled around 6,000 open job listings. Leadership framed the move as part of a continued effort to run more efficiently and offset the company's record AI infrastructure spending. The reductions span product, recruiting, and several middle management layers. Meta plans to reinvest the savings into custom silicon, data center expansion, and the next generation of its Llama models. The announcement landed alongside Microsoft's similar move the same week, and together they represent more than 20,000 jobs reshuffled in 72 hours of AI-driven restructuring.
And Microsoft's parallel cuts.
Microsoft confirmed it is offering voluntary buyouts to roughly 7% of its U.S. workforce, an estimated 8,750 employees. Eligible workers are senior director level or below, where age plus years of service totals 70 or more. Microsoft has not framed the move as AI-driven, but the timing leaves little ambiguity. The company is on pace to spend more than $80 billion on AI capital expenditure this fiscal year and is rebalancing payroll toward research, security, and cloud infrastructure roles. Together with Meta's cuts, the moves have analysts asking whether 2026 will be remembered as the year big tech traded headcount for compute.
Up north, an AI lifeline.
The Business Development Bank of Canada launched a $500 million program on Friday, designed to pull small and medium-sized businesses off the AI sidelines. The program is called LIFT, short for Lead with Innovation and Focus on Technology. It pairs eligible owners with expert AI advisors and offers loans ranging from $25,000 to $5 million, with principal payments deferrable for up to 2 years. Companies choosing Canadian-developed AI tools qualify for a preferential interest rate of 2.25%. The bank says only 30% of Canadian small and mid-sized firms used AI last year. But those that did proved 24% more productive than peers.
Now to a weekend outage.
Character AI spent the weekend in damage control mode after thousands of users reported degraded service starting Saturday night and stretching deep into Sunday. Down Detector lit up with complaints of slow responses, human verification loops, and outright loading errors. The company posted multiple investigating an issue alerts spanning chats, voice features, and character creation. The latest disruption lasted about 37 minutes at peak severity. Character AI has been one of the most heavily used consumer AI companion platforms, and repeat outages this spring are renewing scrutiny over how the company is handling growth, infrastructure, and rising scrutiny from regulators in the US and abroad.
Now to coding AI fundraising.
Cognition AI, the maker of the autonomous software engineer Devin, is in early talks to raise hundreds of millions of dollars at a $25 billion valuation, according to Bloomberg. That figure would more than double the $10.2 billion valuation Cognition reached just 7 months ago. The new round arrives on top of more than $400 million raised earlier this year, led by Founders Fund. Devin can plan, write, test, and deploy code with minimal human input, a capability that has rapidly become the most contested category in enterprise software. Investor demand reflects a broader shift, as boards increasingly ask not whether to deploy AI coding agents, but how quickly.
And one more startup raise.
Era Computer announced $11 million in fresh funding to build a software platform purpose-designed for AI gadgets, the new wave of wearable rings, pendants, glasses, and pins that pair a microphone, a sensor, and a constant cloud connection. The $9 million seed round was led by Abstract Ventures and Box Group, with participation from Collaborative Fund and Mozilla Ventures. Era's pitch is that today's smartphone operating systems were not designed for always listening, always reasoning hardware, and that the next generation of consumer AI devices will require their own software stack. The company hopes to be that stack.
And finally, a regulatory update.
Brussels is closing in on a decision that could reshape AI compliance across Europe. The European Union's Digital Omnibus proposal, now in active trilogue negotiation between the Commission, Parliament, and Council, would push the original August 2nd of 2026 deadline for high-risk AI compliance to as late as December 2nd of 2027. Embedded high-risk AI systems could see deadlines pushed even further into August 2028. Watermarking obligations would extend to November of this year. A political agreement could land within days. That's your briefing for Sunday, April 26th, 2026. For DX Today, stay curious.